What's up, everybody? Welcome to the Stocks channel. My name is Corey, and today we're going to do macro level analysis on the stock market. We'll look at all of the indices, we'll look at Bitcoin, and we'll also look at the Russell 2000 and the VIX. So first up, we're going to take a look at the S&P 500 SPX index. So let's crack open this chart and see what's going on in the stock market today. Alright, so first up, we're looking at the SPX, which is the S&P 500 index, and we're looking at a weekly chart, so every candlestick does represent one entire week's worth of price action. Now we can see we did have a very bullish week, closing at all-time highs and well above the 5 EMA. We still have a very strong bull trend, and we did close above the upper Bollinger Band. Also note that we did close above that price target that we had at 4,152. Remember, the next price target on a macro level scale is going to be all the way up here at 4,306. So from last week's close to that price target above is about another 2.8% increase. Now remember, this is a macro level price target, and it could take the rest of the year to get up there, and we could see pullbacks and corrections before we get up to that level. So don't just look at that level at 4,306 and think that we have to get there this month, because it is not a guarantee that we're going to continue to go higher without a correction. So you can see on a weekly chart, we really have nothing to worry about except for the closing over the upper Bollinger Band. Next week, those Bollinger Bands will expand and we can continue to go higher. But we're also due for a pullback according to this analysis, and it wouldn't be unlikely to see a little bit of a pullback from these levels. Now, another thing I like to do on these weekend updates on macro level analysis is look at the bear bull survey. We could see last week that we did get a little bit of a reduction in the bulls, going down from about 57% to about 54%. Now remember, any level over 50% is still in that greed phase. Remember, you want to be fearful when others are greedy, so this is definitely not the time that you want to be taking on too much risk. Don't be buying weekly call options, and don't be getting over leveraged at all-time highs when everybody is bullish and everybody is getting greedy. So that's one of the main messages I want to get across in today's episode, is there's definitely a lot of greed as we continue to go to these all-time highs. Now don't get me wrong, this is still a very bullish market, and you do want to be a bull in a bull market. I don't suggest trying to call a top and trying to short this market just because you think it won't go higher. That is a losing strategy, and you want to be a bull in a bull market. Don't fight the trend is your friend, and if you're trying to fight the trend, you're going to be on the wrong side of the trade the majority of the time, and you're not going to be a profitable trader. Now let's switch the SPX over to a monthly chart, and we can see on a monthly chart that we are also getting overextended over the top of the Bollinger Band. On a monthly chart of the SPX, we're looking at the top of the Bollinger Band somewhere around 4122. So we're currently trading over top of that, which means upside is running out for the month of April as we get into the middle of the month here. It doesn't mean we can't go higher, it just means that we're getting overextended on a monthly chart. Anytime you get overextended on a monthly chart, it significantly increases the chance that you're due for a pullback. Just look back at this chart, and you can see the last time on a monthly chart that we got overextended was in August of 2020. We continued to get overextended, including into the beginning of the next month in September, but you can see that it did trigger a stock market correction. And that was a very significant pullback that lasted 2 months. So while we can continue to extend, and we could easily get up to that 4306 level going into May of next month, it does increase the probability that a significant stock market correction is only 1 to 2 months away. So don't just assume that we're getting near a top and that we need to see a deep correction, but understand that the monthly charts are also telling us that a correction looks like it is getting very close to being here. Now when I say very close, this is on a macro level scale, and this could easily still be anywhere between 6 to 12 weeks away. So don't get bearish just because we're going to all-time highs in a bull market. Bull markets consist of all-time highs, and they consist of uptrends. So don't just try to time the market. Just be defensive and continue to trade to the long side. But as I always tell my Discord members, as we get to these levels, you just want to carry a bigger cash position. You can continue to trade to the long side and just maintain at least 50% cash. And that way, if you do get caught in the correction, you don't have all of your money tied up in the market during the sell-off. So on the monthly chart of the SPX, we're definitely getting overextended to the bull side, but we still do have a very strong bull trend, so there's no reason to be bearish. We're well above the 5 EMA, and you could argue we are due for a pullback to get closer to the mean, but you can still see the price action and the trend are incredibly bullish in this market. So next, let's jump over to the NDX, which is the NASDAQ 100 index, and we're back to a weekly chart. We could see we had a very bullish week closing at all-time highs, and our price target for the NDX is up there at 14,488. From last week's close to that price target, we're about 3% away. So very close to how far we are away from our SPX price target. We could see the price actions closing well above the 5 EMA, and we are still maintaining that bullish trend on this weekly chart. Now the NASDAQ 100 already did have that sector rotation, which did cause a tech correction, and that allowed this market to cool off. So you can see we're not above the upper Bollinger Band, but we're right on top of the upper Bollinger Band on this weekly chart. So the NASDAQ 100 is still not overextended, and these Bollinger Bands will expand going into next week, which means the NDX can continue to climb higher. Let's jump over to a monthly chart, and we can see the NDX is not even at the upper Bollinger Band on this monthly chart. Again, that was because the tech correction allowed it to cool off, and once a sector like the tech sector cools off, it does increase the upside potential. We can see the NDX is getting far away from the 5 EMA, but it's not near the upper Bollinger Band, and you can see our price target is actually within the Bollinger Bands. So it does look very likely that we're going to see the price target that I have above in the NDX in the very near future. You could see all of the trending is still very bullish, and there's no warning signs that we're going to see a shift in the trend just yet. We're more than likely going to see these price targets before we see a major stock market correction. Remember that stock market corrections are normal in every single bull market, and without a correction, the market becomes more unhealthy. So a stock market correction is due, and it would be healthy for the bull market. Remember that bull markets consist of higher highs and higher lows, and as long as that correction maintains a higher low situation, we're still going to be in a bull market, and we could still see the market go bull. Remember that a secular bull market consists of strong earnings and a growing economy, and that is the type of situation we're in. Add in a ton of liquidity, and you could see why it's so hard for the stock market to go lower. So back to the weekly chart on the NDX, you can see we have a strong bull trend, and we're going to continue to hike higher towards that price target. Obviously, this is all subject to change, and we continue to do daily analysis on the stock market, but from this macro level view, you can see that there's not too much to be worried about in the NDX. Jumping over to the Dow Jones, we also see closing at all-time highs with a very strong bullish week. We still have a nice strong bull trend, and we still have price action closing over top of the 5 EMA. Now on monthly charts of the Dow Jones, you can see that we're also trading above the upper Bollinger Band for the month of April. Very similar to the SPX, we're getting a little overextended at these levels. Remember, we won't get an expansion of these Bollinger Bands until the month of May, and we're only about halfway through the month of April. So it does hint that there could be a pullback coming, and we could come back to the mean for the month of April before we see more bullish price action possibly coming next month. So remember, if we get too overextended on a monthly chart, it increases the probability that we need to see a retracement and a pullback back within the Bollinger Bands, and that's why you shouldn't be taking on too much risk in this market. It's showing that it's getting a little overextended. Even though it is a strong bullish market, we could be due for a small pullback. Don't let a small pullback possibility stop you from being a bull in a bull market. Just because we're due for a small pullback doesn't mean you need to turn into a bear. I see a lot of people making that mistake, and it's a very easy trap to fall into when you hear people saying that a pullback is due, that you think you have to sell everything, go in all cash, and possibly even start shorting the market. Don't fall into that trap. Just understand that a pullback is due, and then we're likely going to see more upside in this market. On the Russell 2000 weekly chart, we still see consolidation and sideways price action. The price action did close the week over top of the 5 EMA on the weekly chart, and we could still see all of the moving averages are still very strongly stacked to the bull side. Now, why did the Russell 2000 go into this sideways consolidation? Well, it's very easy to see if we switch over to this monthly chart. We can see the Russell 2000 got way too far extended, and if you look at the month of March, you can see we were way above the upper Bollinger Band, and that did trigger a correction and a sideways move in the market. That is the type of price action I'm talking about on the other indices. If they continue to get too far extended over the upper Bollinger Band, it will trigger a correction and it will trigger a consolidation. You can see the Russell 2000 has yet to reach that all-time high price because the upper Bollinger Bands don't expand up to that level, and we've already triggered a correction and a cool down in the Russell 2000. So while the Russell 2000 is consolidating, it could be a good time to start accumulating and buying into the Russell 2000, getting ready for new all-time highs. Remember, I just showed you the rest of the stock market is going to all-time highs, and it's very bullish. Usually we see a sector rotation, and we'll see people selling the winners and buying the losers, and the money just keeps moving around. So right now, while the Russell 2000 is currently at all-time highs on closing prices, you can see that it's not at all-time highs completely. So the Russell 2000 going back to the weekly chart, you could see that it is in this nice consolidation, and we are getting a bull breakout on daily charts. So based on the Russell 2000 macro analysis, I'm getting relatively bullish for the Russell 2000 small caps, and it does look like it could try to make all-time highs again. You can see we do have support at this trend line below, which we did get very close to testing. So that does mean buyers stepped in and bought the dip, and this market does look like it could have a lot more upside, and you can see we're not even close to the upper Bollinger Band on the weekly chart. So Russell 2000 is looking really good, and if the rest of the stock market remains bullish, I do expect to see the Russell 2000, which has been a laggard, start catching back up and possibly break into new all-time highs. Now I also want to take a look at the VIX this weekend, and again, this is a weekly chart of the VIX, and we can see the VIX is breaking down to new lows. A lot of people see the VIX breaking down to new lows, and they think that has to mean that a market correction is near, because the VIX is going to spike off the lows. While that is a possibility, that doesn't make any sense. That's the same thing as trying to call a top. If the VIX is heading lower, that means fear is leaving the market, and that means the market's likely to continue to go to all-time highs. Can it spike off the lows and go higher? Of course it can, but that doesn't mean it has to. So don't look at the low VIX as a bearish indication. It's actually a very bullish indication. Now, if we see the VIX start to spike and we do see it starting to break back above 18, that will be a warning sign that a possible market correction is near. But right now, the VIX is screaming that there's no fear in the market and you should be a bull. Don't let the low VIX trick you into being a bear, because a low VIX is actually a bullish indication. All right, jumping over to Bitcoin, we're looking at the weekly chart and we can see that Bitcoin is currently down over 7%, and we did hit that price target in the 64,000 range. We do have more upside price targets, but I told you this before on a monthly chart, Bitcoin is due for a correction. So I don't want to spend too much time on the weekly chart because the monthly chart is telling the whole story. We see right now the price action is currently sitting on top of support right around $55,689. That level is a strong support, but we also have support down here below at 51,000, which we already did see bounce as support. Now, why did Bitcoin have this sell-off? Well, let's go look at this monthly chart, and you could see that we were way above the upper Bollinger Band. The top of the Bollinger Band on a monthly chart is right at that support level that we did bounce off of, which is right around $51,000. We were trading all the way up here around $65,000, and the top of the Bollinger Band is about $13,000 lower. So this is no surprise, and we did see this with the Russell 2000. We got way too far extended, and now we're due for a pullback. You can look at this monthly chart and see that we were going parabolic, and Bitcoin can't maintain a parabolic move like that forever. So this pullback will allow Bitcoin to go higher, but the question is, how deep is the pullback going to go? So if Bitcoin does break down below support at 51,000, it's possible we come all the way back down to the 5 EMA, which is at 45,000. If things go from bad to worse and we break down below that support level, now we're looking at Bitcoin possibly coming all the way back to about $30,000. Now, there is a lot of Bitcoin bulls out there, so I do think that there will be buyers of this dip. But right now, we really just want to see Bitcoin close lower than about $59,000 for the month of April. That will allow the Bollinger Bands to expand, and that will allow Bitcoin to cool off so that it can go higher. If Bitcoin doesn't cool off, it only increases the risk that it can go through a flash crash. So remember, in bull markets, you want to see corrections and you want to see cool off periods and you want to see consolidations, because that gives you a foundation of support to build off of to go to the next leg higher. Right now, with Bitcoin going up in a parabolic straight line, it just doesn't have a foundation of support to build off of. So consider this bullish for Bitcoin in the long term, but in the short term, there should be weakness and there should be a correction in Bitcoin. And that's why I don't think you should be in Bitcoin taking on a ton of risk right now. You can see it's way too far extended on this monthly chart, and this cool down is way overdue. So on the weekly chart, you can see we are going sideways for the month of April, and we really haven't gone much of anywhere. We're starting to print somewhat of a doji candle, and the bulls and the bears are trying to battle it out to figure out where Bitcoin's going to go. Right now, I'm going to give benefit of the doubt to the bears. Even though the bulls are holding up above support, it's due for a cool off, and when it's due for a cool off, it's really hard to find a lot more bulls out there because they can also see it's overextended. Who wants to buy Bitcoin at these levels? Not a ton of people that know what they're doing are looking at Bitcoin and saying, that's a great deal, I want to own some Bitcoin. So the correction will bring in more buyers, and they will be buyers of the dip at lower prices. So right now, just let Bitcoin play its course, and I would just avoid it for the month of April and let this correction play out. You don't want to make any assumptions at where Bitcoin's going to find support, because it could easily blast through support and go through a waterfall, wave of selling, flash crash, and the next thing you know, you wake up and Bitcoin's at $30,000. So if you're buying Bitcoin and you don't want to take on a ton of risk, make sure you're setting stop losses and managing your risk, or just wait it out and let's see where the price action settles. So just going back to the S&P 500 to summarize this macro level analysis, is this market is still very bullish, but we do see the Dow Jones and the SPX looking a little far extended on their weekly and monthly charts. That doesn't mean they can't go higher, and we do have higher price targets up here, but do understand that it increases the probability that we see a pullback going into the end of the month, and we would likely see a resumption of the bull market going into next month. But right now, we're getting a little far extended in the month of April, and I would not be surprised to see a little bit of a pullback before we can go much higher. Remember that a bull market is higher highs and higher lows. Right now, we're at the stage where we're forming higher highs, so that means the next stage is that we need to form that higher low. So don't approach the market with emotions. We're going to strictly stay objective, and we're going to follow the price action. And right now, the highest probability favors that we need to form a higher low, which means we're due for a pullback. We're getting overextended, so a pullback is due. And that would be a buying opportunity because we still have price targets above that are much higher. So I'm a buyer of the dip, but at these levels I'm defensive, but I'm waiting for a nice pullback to add to my long positions in this market. Remember, I like taking profits as the market goes higher, and I like to buy as the market goes lower. Buy low and sell high is such an obvious strategy, but too often you find people chasing the market the higher it goes, and then when the market's going lower, they're too scared to buy. Reprogram your brain to want to buy low and reprogram your brain to want to sell high, and you will automatically become a much more profitable trader overnight. Something as simple as buying on red days and selling on green days is the easiest way to become a better stock market trader. Also remember, I have the Stocks Channel Discord where I give intraday updates to help you stay on the right side of this market, and I bring new trade ideas to you weekly to help you find the best trades in the stock market. If you're interested in the Stocks Channel Discord community, you can find out how to join by clicking on the link in the description of the video. So I hope you're all having a great weekend, and I hope you're crushing this market. And as always, I will see you in the next episode.